PulseX will be a decentralized exchange built on PulseChain that is best known for its buy and burn function, where 21% of all fees will be used to buy up PLSX tokens from the open market, which will be then burned. This makes the token deflationary, and many people are super bullish on PulseX because of that. However, PulseX will also offer high yields if you provide a PLS or PRC20s that you hold as liquidity. This section on the PulseX website is actually tricky, and unfortunately I have to disagree with what it says. So it says that providing liquidity is less risky than trading. Well, even though this is true, it's kinda tricky putting it this way, because we know that trading is extremely risky, and when you say that providing liquidity is less risky than extremely risky, that's basically just very risky, right? So using this wording actually gives you the feeling that providing liquidity is not that risky. I don't want to go too deep into crypto farming, and I don't suggest anyone to provide liquidity in general, not just in PulseX, especially if you are not aware of how it actually works and if you don't know what is impermanent loss. But one more thing I also want to point out is that on the website it says that providing liquidity will allow you to earn predictable income on your crypto, and we know that predictable and crypto just never go together. Crypto is not predictable at all, and earning interest on an asset that could go negative 10 or 20% in one day, we just can't call it an income, especially since you can actually lose some of your tokens due to the impermanent loss rather than earn some. Predictable income could be an interest on stablecoin, where you know how much you are going to get, because the value of the coin will remain the same. But of course, that's just if you don't fall into some 20% stablecoin APY trick, where you could lose literally everything that you've put in. But hopefully these types of events will make people more cautious in the future. Anyway, apart from the farming, PulseX also offers single-side staking, where you can't face an impermanent loss and the risk is lower, so the rewards are also much lower. Basically, what the single-side staking on PulseX is, you stake your PLSX tokens, and as a reward, you will get another token called an incentive token. Right now on the testnet, this token is called PRT or party token. Just bear in mind that this party token will not exist on the PulseChain mainnet, because the party token is just short for third-party token. So essentially, there could be many different staking options where you can choose to stake your PLSX for different incentive tokens. They just made it simple with one token called party, but when PulseChain goes live, there will be other tokens that you can earn as interest. If you haven't watched my video about crypto staking yet, I highly recommend you to do so after you finish with this one, because I explain in depth why I don't like staking in general and why I don't recommend anyone to do it. Of course, I'm not giving you financial advice here, because I'm certainly not a financial advisor, and if you want to go high risk and high reward to provide liquidity and earn over 100% APY, go ahead and do it. If you also want to take advantage of the single-side staking options on PulseX, again, go ahead and stake your PLSX. All I'm going to say in this video is just my personal opinion based on my own experience, and I don't commit anyone to it. So why I'm not bullish on PulseX single-side staking in particular? Well, the first thing we want to look at when we are trying to figure out something is that do we have anything else we can compare it to, so we can actually work with data and not just blindly guess. And in this case, we can find another big decentralized exchange that offers incentive tokens for single-side staking, that is PancakeSwap. This is the Binance Smart Chain DEX, and it's been around for a while now, so we can extract some valuable data from here. If I go on the top left corner, where it says earn and then pools, we can see all the incentive tokens PancakeSwap is offering in its different pools if you stake their cake token. This is pretty much how it's going to be for PulseX as well. You could stake your PulseX in different pools and earn different incentive tokens. However, I'm not sure if we could have the option to stake PLSX and earn PLSX as it is for the cake token here, because we don't have that option on the PulseX testnet. As far as I know, you won't be able to earn PLSX tokens by staking, because that will inflate the supply, and that's why it's being designed to earn incentive tokens. As you can also see, the APR varies for the different pools, and usually the APR is high when there is less interest in the particular pool. But let's have a look at these tokens that you will earn and how well they are performing. So in the first pool, if you stake your cake tokens, you will earn this OLE token. So I'm gonna go to CoinMarketCap and look for this token to check how it is performing. So this is the token, and you can see that it's quite new. It's just a couple of days old and it's not performing very well. Of course, we could argue that it's not performing well because we are in a bear market and nothing is actually performing well, but you never know, only time will tell. However, I don't want to make any conclusions based on only one example. So let's have a look at the rest of the pools. So if you stake your cake tokens in the next pool, you will earn this trivia token. I'm gonna quickly pull this token on CoinMarketCap to check how the price is going. What we can see again is that this token is also around 2 weeks old, so it launched fairly soon. It saw a 2x pump within its first day of launch, and since then it is just going down, so we can basically say that this token is also not performing well. Could it go back to its all-time high and even higher? Yeah, why not? But this is just how it looks for now. I'm definitely not claiming that these tokens are dead, but I don't see them being top performance either. Anyway, I'll have a look at the next one because maybe the next one is doing fine. So in the next pool, you can earn this SDAO token. Again, I'll quickly pull this token on CoinMarketCap and we can see that finally we have one that is 1 year old. This one actually performed quite well, but it's been on a downtrend since September last year. Again, we gotta see if it's going to survive the bear market, but at least it made a decent move to the upside. And I'm gonna look at one more pool, cause I don't wanna spend too much time on this. So in this pool, if you stake your cake, you will earn this Antex token. This is how the token looks on CoinMarketCap, and you can see that it's not too pretty. The whole point of all this was that usually the incentive tokens don't perform incredibly well, and they are more likely to be one of those projects that are further down in the rankings and you never heard before, rather than be top or even decent performers. So as you can see, the APR on average between all these pools is around 20%. If I take this pool for example and pull up their calculator, I'll quickly demonstrate to you how much you can make. So let's say you stake $1,000 worth of cake for 1 year. If we assume that the price of cake and the incentive token stay the same after 1 year, you will get $215. $215 for 1 year. Guys, 1 year is a long time. You know, some people don't take into account that 20% or whatever might seem a good deal to earn passive income, but this is over 1 year, and $200 for 1 year is just nothing. And not to mention that you might actually end up losing money instead of earning, because in 1 year you don't know where these tokens gonna go. I think this crypto passive income stuff is just overestimated, and if you are investing in crypto for 20% return over a year, you better put your money into S&P 500. As you know, it always goes up when you zoom out. In crypto, you have the chance to 100x your money over a year, and this is where your focus should be. And I know many of you will now say, but why I should not stake my PLSX and earn a token that might go up in value and make me some cash while I hold my PLSX? Well, I never said you should not stake your PLSX, I just said I'm not bullish, meaning I don't think it's something you should be too excited about because you will make a lot of money. I personally won't stake because I want to have access to my assets at all times, but you can do whatever you want. Some people in the comments said that I'm a trader and that's why I don't like staking, because I said when you lock your coins you can miss the chance to buy low or sell high. I don't know why, but for some reason people think that buying and selling for profit makes you a trader. I have never preached trading on my channel, first because I'm not good at it, and second because most of the traders lose money. Buying low and selling high doesn't mean you should buy every dip and sell every pump, simply because not after every dip there is a pump. There are these market conditions where you know it is a good buy and a good sell. 20k Bitcoin is definitely within the buying range, even though it might go lower. DCAing at these prices is something you usually want to go for because the downside risk is not so big even if we fall deeper. DCAing at 40k is not so good idea because we are literally in the middle of nowhere and the market can go either to 100k or 10k. Not to mention that some people were DCAing at 50-60k, and that is just too big of a risk. This zone is definitely within the selling range, and when we talk about buying and selling, you can clearly see when we are in a bear market and when we are in a bull market. They usually last for a while, and if you are buying now, and let's say you keep buying in the next months as we expect to continue trading lower or sideways at least, you are basically buying the lows so you can eventually sell the highs after 2 years. I don't know why people got mad at me saying that staking HEX for 5 or 10 years is insane to me, because you are basically missing on those gains to sell on a bull market so you can accumulate more in the bear market. People say that I am a trader and I'm trying to time the market and all that, and they just prefer to stake 5 years or so and hold because the long-term holders make the most amount of money, and on top of that they will get paid interest. Well, I respect your opinion, but I prefer within 5 years to buy as much as I can in the bear market, then sell in the bull market and make an insane amount of money, and then buy back again in the bear market with substantially more cash. If you wanna hodl this whole time and earn 40% interest without having any clue when your staking ends where the market is going to be, go for it. People still believe that the main selling point of HEX is staking, when Richard Hart literally said multiple times that price appreciation is the feature and staking is the bonus. It is just so obvious when we're in a bear market and that is a good time to invest, and you don't have to time the bottom in order to make a lot of money. Buying anytime within the bear market will make you a lot of money further down the road, and you don't even have to sell at the top. Well, I went a little bit off topic here, but I just wanted to clarify this real quick because I think it's worth mentioning all this. In terms of PulseX, we don't know yet if there are going to be lockup periods with penalties like how HEX staking is designed, or if it's going to be just normal locked staking, where if you early unstake the only penalty will be the interest you were supposed to get. Of course, these locked coins will provide stability to the price of PLSX, and you'll have a chance to make make some money on the side without doing anything. But considering that these incentive tokens will be known only for being incentive tokens, the selling pressure on them will be insane and everybody will try to make as much money as they can selling everything they receive. In my opinion, they will have a hard time succeeding because of that, unless they build something that is really valuable and people will put more money into the project than the people who will get the token for free will be selling. I don't doom these projects to a failure, but I think this is not something you should be focused on. I think the best thing you can do is to analyze enough projects and find the ones that are potential hidden gems that can make you return on investment of 100 or 200x within 2 years or so. If you think one of them is PulseX, just don't hold your back through the highs and lows because you staked and you are earning passive income. As I said, PulseX single side staking is great because it will hold the price stable, but you want to be one of those people who take advantage of this price and not the one who holds it stable. So make your decisions wisely, and what I said in this video is just my opinion and not financial advice. If you want to know what to do while you wait for the launch of PulseChain and PulseX, I recommend you to check this video that will pop on the screen. Don't forget to hit the like button if you want to support my channel, and with that being said, I'll see you in the next video.